Hi there, welcome to Kneppy Invest, and welcome to another technical update video. Standard Sunday affair for me. I always record these videos on a Sunday morning, almost always. I'd say 99% of times, and current time is 9:45 a.m. There is a theme in today's video, not necessarily when we look at indices, commodities, and Bitcoin and bonds, but when we get to the individual company portion of the video, there is a theme there. And that theme is trend killer. This is something I've been contemplating a fair bit over the past few months, and I think I'll be contemplating this a little bit more moving forward. And I'll talk about more what a trend killer might be when we get to that part of the video. Now, before then, we'll have a look at indices, commodities, crypto, bonds, and also currency. We're all hoping the Australian dollar is rallying. It should be rallying. I do know the euro is rallying against the American dollar, but I'm hoping the Australian dollar is rallying because I still plan to go to the United States in September, October, at that period to do a bit of hiking. And I really want the Australian dollar to rally hard because I've been looking at some places to stay, some motels, and they're still really expensive. And I'm also hoping that a lot of Canadians keep on cancelling their trips to America, so accommodation becomes a little bit cheaper. Anyway, let's start the video looking at some indices. And what I'm doing now is starting on the weekly XJO. I did see something or notice something really intriguing yesterday, is if you do have a look at the weekly chart, it's been in a channel. Look, the XJO has been in a channel, an upward sloping channel since 2008 or 2009. And it's been within this channel, consistently during this time period, apart from COVID-19, which was a black swan event. But other than that, it's been generally within this trading channel, on occasion slightly above it, on occasion slightly below it. And right now, because we have seen a bit of weakness in the market over the last month or bit, we are now almost in the middle of the trading channel. Now, there's still a lot of downside at play just by looking at this chart. But what I was focusing on and noticed is when you have a look at the weekly chart and have a look at the 25 and 100-week crossover, when you do see the initial crossover, like the negative crossover, that's actually the time to buy. That is a time to buy over the past 15 years. And I went back through, that time period, and yes, that is a time to buy. Now, at this point in time, we're a long way from getting that crossover. I'd say at least maybe a month or 2 months away. But if we go back to say the last time we had a negative crossover, this was in October 2022, and that was a time to buy. That was almost pinpointing the low, the October 2022 low. And then if we go back to COVID-19, when it crossed over, that was the week we had the low. Perfectly. That was a time to buy. So October 22 was a time to buy. Late March 2020 was a time to buy. Even if we go back to 2018, there was a moving average crossover. And that was pinpointing almost the exact bottom during that period as well. You also notice that when we do have that negative crossover, we get a positive crossover not long after. So this has happened the last 3 times. And if we go back further, during 2015, there was a bit of weakness in the market. The whole reason there was a fair bit of weakness in the market in 2015 was just a significant decrease in iron ore prices. So we saw BHP, Rio Tinto, Fortescue fall a fair bit during that period. So that's why we had this down period. I don't really remember it because I wasn't heavily invested in those type of companies. But if you did buy when we had a moving average crossover, a week of the negative moving average crossover, it was almost at the bottom, not quite. The bottom actually was experienced about 3 or 4 months later, but still you would have done fairly well. If we go back further than that, we're now moving towards the early 2010s, and even the next moving average crossover, which was August 2011, you almost bought at the bottom there as well. Almost, not quite. Now, this doesn't always work. This has worked for the last 15 years, but if you use this sort of strategy during the GFC, you would have bought around about June 2008 when we did have that moving average crossover, and the market just kept on falling. So in a way, this strategy probably works when we have corrections or crashes that aren't exacerbated by economic turmoil like we experienced in GFC. So that was an unusual event. But on occasions, those unusual events do happen. Even if we go further back, if you bought back in August 2022, when we had a moving average crossover, almost the bottom, not quite, almost. And then, yeah, further back, even works. Yeah, moving average crossover by then. Moving average crossover by then. So we're talking about February 1995, October 1992. Doesn't quite work in 1990, which was the last time Australia was in a recession. And I am excluding COVID-19. So possibly this doesn't work if we go into a recession, which is a possibility. Anyway, so that is something I noticed the other day, that if you do have a look at the weekly chart and you just buy when the moving average crossover, negative crossover, that is actually the time to buy. But doesn't always work. And it doesn't work when looks like we go in a recession or there's serious economic turmoil throughout the world. Okay, so that's the XGO weekly chart. Pretty good week. In fact, all indices had a pretty good week in Australia, all up between 1.5 to 2.5%. Now, we did expect a bounce, and we did experience a bounce. Now, I'm going to go to the daily chart because all bounces are different. Now, if you do have a look at the XGO, if this was an individual company's chart, there would be no way I would be buying. This is still looking fairly weak. Now, we have had that bounce, but at this point in time, I would categorize this bounce so far as being fairly weak. There's not a lot of enthusiasm in this bounce just yet. So I still think this is looking fairly negative, and all we need is to see some bad economic data or Trump starts to triple down on tariffs, and we will see further downside, in my opinion. So I still think a hard landing is still on the table, which is a little bit different. That's more talking about the economy than the indices. I won't have a look at the XSO. I will have a look at the small caps. Small caps had a really good bounce. This was, in a way, a good sign that we did see a little bit of more action in the small caps. So small caps would be perceived as being a little bit more risky. So I thought maybe this would have rallied a little bit less than some other indices because it's more risk, perceived risk, I would say. But the XSO actually did rally by 2.4%. The XTRO was up about 1.98, if I remember correctly, 1.82. So XSO, or the small caps, had a better week, better bounce than some of the other indices. And you can sort of see that in the chart here. A really nice bounce. But again, the XSO has just hit the 25-day moving average, and that could be a resistance area. By the way, XGO is still a little bit shy of that 25-day moving average. So a little bit more upside possible before we see more downside. I don't know. Of course, we're talking about the future, and the future is unwritten. Unless you have a time machine. And if you do have a time machine, don't tell anyone else about it. Just tell me, and we take advantage of that time machine. You and I, together. No one else, just you and I. But anyway, the future is unwritten. The future is unwritten. Technical analysis can't tell you exactly what's going to happen, but it gives you a more chance of success. So you can think about technical analysis as increasing your chances of success. It's all about probability. So because we have had a moving average crossover and we have had the bounce, I think there is a chance the bounce could continue, but there's also a chance that this could be a dead cat bounce. So at this point in time, and I have noticed a few experts, they've mentioned, these are people who use technical analysis, they have mentioned that they aren't going fully in. They have actually increased their cash because this is a sign of a little bit of weakness in the market. And this could be the start of a longer-term downtrend. Now, if you listen to experts who don't use technical analysis at all, they are thinking this is just a good time to start investing because, not start investing, but a good time to add to your portfolio because, it's better value out there. So it's all about your what you do. You know, it's all about your investing strategy. I suppose that's the best way to say it. And for me personally, since I do use technical analysis, I still see a lot of weakness in the market. So I need to see a bit of strength. And the reason we do have a lot of negativity in the market still, even with this little bounce, is because of uncertainty. Uncertainty is the biggest factor. We just don't know. And the market doesn't like uncertainty. Uncertainty is just increased risk. And at this point in time, there's increased risk. Anyway, so back to the XSO. This is probably a little bit of a positive spin because the XSO had a really nice bounce. Maybe we are starting to see a little bit more confidence in the market. Maybe. Now onto the XTL, which is the ASX 20. Yeah, this is another case of a fairly weak bounce. I'm not seeing much here at all. Now, if we have a look just after the yen carry trade debacle in early August, that was a nice bounce. But if you have a look at that chart, at that point, there was there was only a 2-day down period. That's it. It was just a short-term negative strike on the market, and then we recovered almost immediately. There was no moving average crossover. We did see multiple weeks down. And if you do have a look at the XTL, this was primed for a bounce, and we've experienced that bounce. But again, there's no reason to think that this is the end of the short-term, correction. There's no reason to think this is the end of the correction, and there's no more downside to come. So weak bounce for the XTL. Tech, yeah, in fact, this is maybe even weaker. So we had the moving average crossover a few weeks down in a row, and we had one good day in the week. That was on Thursday. Other than that, not that good for tech. And overall in the week, it was up 1.84%, but that was mostly just on one day, because on Thursday, tech was up 2.22%. So really, all the gains in the week were just one day. Banks, this one's really interesting in my opinion, banks, because we saw the first down period, about 5 down days in a row for the banks, and then we had a pause in the negative sentiment. And this is the definition of a weak bounce. So this was between about the 21st of February and the 5th of March. That is the definition of a weak bounce, if ever I've seen one. And then we saw another period where the banks just dropped like a rock. And this could be another definition of a weak bounce developing. So not there yet, but still looking fairly negative for the banks. So all the indices in Australia, even though we have seen a bit of a bounce, they're all looking still fairly weak. Now on to the American indices. What I'm going to do now is just going to write down 1250. I was thinking of doing this. 1250. You have no idea what I'm talking about right now. I just said 1250. Have a look at how much time has gone in this video, and you would have seen why I said 1250. Anyway, let's move on to the American indices. And straight away, as soon as I see the NASDAQ, I just go, yeah, this is nothing. This is not a good week. So I expected a much better week for the NASDAQ. It was only up 0.25%. I was actually shocked when I saw this. I was expecting NASDAQ to be up a fair bit, only up 0.25%. And you can sort of see that in the daily chart. So a long period where it's just gone down, a little bit of volatility in there. And over the past, say, 7, 8 trading days, it's gone sideways. Nothing much happening. The other thing to notice here is we've seen 5 of the last 6 days of green candlestick. So we have seen the indice rise during the day. So selling on open, buying towards the end. And that's why we've seen 5 green candlesticks. But we haven't seen much movement from day to day. Just we've seen some buying coming in during the day. So overall, still looking fairly weak and not much of a bounce for the NASDAQ at all. Maybe the bounce will come over the next few weeks, but at this point in time, it's not looking healthy at all. Dow Jones, probably would have expected a better bounce here. Yeah, I would expect the Dow Jones to be a little bit more oversold. You can see it fell a fair bit between the 10th of March and the 13th of March, and then we've had the bounce. So a nice little bounce for the Dow Jones, but again, it could be just a dead cat bounce. I probably would assume not much strength in this bounce at all. So all these indices are weak. Without doubt, they're all weak. We've had moving average crossovers. The bounces have been fairly weak. Now onto the Russell 2000. In fact, the Russell 2000 was down on Friday. And this is even weaker. This is probably the weakest of all the ones we've seen. In fact, there's a possibility, just a possibility, the bounce has come in, or is, or has already come to an end. Possibility. So again, another weak bounce for the Russell 2000. So the next week's going to look really interesting for our indices, not only our Australian indices, but also American. And again, the problem is we just don't know what's going to happen when it comes to politics in the United States, because all it needs is just one comment from Trump that could send the markets down 2 or 3% in one day. It seems like he's less focused. Trump's less focused on the market itself. He was way more focused on the markets back in his first term. And he's already mentioned, oh, well, there might be some short-term pain. Could be even longer-term pain than that. So he's less focused on the markets at this point in time, which is a little bit surprising. And I think one of the reasons why is because the markets have fallen fairly quickly and significantly. So he wants to tell his supporters that don't focus on the markets. That's, it's nothing to worry about at this point in time. Okay, so let's have a look at some international indices, and we'll start off with the Nikkei. And maybe we see some strength in some of these, particularly European indices, because, they are doing much better at this point in time. Japan's the interesting one because there's no trend. There hasn't been a trend in Japan for a while. We just started to see a possible downtrend developing, but we did have a nice week, as expected, though, to be honest with you. A nice week, although only up 1.68%, but still nice. If you have a look at the weekly chart here, it's been an uptrend for a while, and this could be just an extended period, a extended consolidation period. We sort of saw that between March 2021 and April 2023. So a 2-year period where the Nikkei just went sideways. So maybe that's happening now. So maybe it's just another situation where history's not repeating, but it is rhyming. Hang Seng has been looking really good, down 2.19% for the week. No, that can't be the week. That's for Friday. So a bit of weakness for the Hang Seng on Friday. In fact, 2 big down days in a row. 2% on a Thursday, another 2% on Friday. Maybe a little bit of profit taking, because if you do have a look at this chart, it's a pretty nice looking chart for the Hang Seng. So maybe some profit taking for Hang Seng on those 2 days. Now onto the European indices, and no sign of distress when it comes to the DAX. The German index looks really good. I would say a lot of defense companies in Germany and Europe are running hard. I don't know what some of those companies are, but I would say they are running hard because of a significant increase in spending in Europe when it comes to defense, because they've realized they can't rely on the United States anymore, which is not a bad thing for the long term for European countries. I do think they have to rely on themselves moving forward. And by the way, European countries combined are much bigger than Russia. What was it? Russia GDP is the same GDP as Spain, significantly smaller than Germany, England, France. So combined, Europe is much bigger than Russia. Maybe even as big as the United States. I don't know. So DAX looks pretty good. No issues with the DAX. In fact, for the week, maybe. It'll be up. Down slightly, down 0.41%. And for the FTSE, it's been all over the place. The FTSE, some big down days in there, nice little rally, and down 0.63% on Friday. And for the week, flat, up 0.17%. But the weekly chart still looks pretty good for the FTSE. Okay, now let's move on to. What about Canadian? I forgot I included Canadian. Canadian indices not looking that bad. Not looking that bad at all. And in fact, it's not that far off. I suppose it's not that far off from the highs. Yeah, nothing to complain about when it comes to the TSX. Now on to commodities. And gold did have a bad day on Friday, but that's to be expected. Look at this chart. This is the daily chart for gold. Is there any reason to be nervous? Probably the only reason I might be I wouldn't say nervous, but the only reason I would say, hey, I think gold's in store for a little bit of a pullback is because if you have a look at where the price of gold is in relation to some of the moving average, well above the 100-day moving average, even above the 25-day moving average. So the percentage distance is quite a bit. Now, if I go to, which one is it? I may not have saved it. There's a, I think it's called MPD or something. I forget what it is. No. What it does, this particular index here, I thought I saved it, but I obviously have not saved it. You do have your favorites. It's not in my personal. No, my favorites. I thought I saved it, but what it does, it looks at the difference between the price and also the. No, I definitely didn't save it. It looks at the price, the difference between the price and the moving averages, and then it just puts in how far away it is by percentage. And that can be a good indication that something might be primed for a pullback or for a rally. And that is something I've been studying recently. And I did have it saved, but for some reason it's not saved. But anyway, if you just have a look at the distance between where gold is and the moving average, it is at the point where I think it's primed for a pullback. And you can see back in October last year, sort of the same signal was there as well. And then we had a pullback. So it is prime. Gold is prime for a pullback because it has rallied a fair bit. Maybe that's the only negative thing I could say about gold right now. For the week, gold still had a pretty good week. Yeah, up 1.3%. And even if you have a look at the weekly chart, it's primed for a pullback. Silver down 1.49% on Friday. In fact, the last 3 days, it has pulled back from about $35 to $33.48. It still looks okay. No complaints about silver. Not as good as gold. And if we have a look at the weekly chart, it has pulled back a little bit, down about 2.75%. And you can probably notice that there is a bit of resistance right there. There it is. Really obvious resistance at that point in time. It is struggling, silver is struggling to get above that level, which is about $35. And I was going to say that is close to the all-time high. Very close, not quite. The all-time high was actually back in 2011, fun enough. So there's still a lot of room for upside for silver. If you go to gold, gold's at its all-time high. Yeah, look at 2011. Gold's rallied way more than silver has. So I do think there could be more opportunity in silver than there is in gold, just because we haven't seen a rally in silver, and silver and gold should be related mostly. What about copper? Oh, copper had a pretty good week. Another good week for copper. 3 good weeks in a row, up 4.44%. This is sort of a little bit surprising because there are concerns about the economies around the world, particularly America, and it is renowned. It is for Dr. Copper on occasion because you can look at copper or view copper as sort of a proxy for the health of the economy. So it's interesting that we're seeing copper rally right now, yet there are concerns about the economy. Now, maybe there's a bit of dissociation between copper and the economy. Maybe it's just because of supply and demand, and that could be it. But anyway, copper looks really good right now. It's at $5.12, which is a resistance level because that's the highs we saw back in May of 2024. So copper is looking really good. And definitely if it gets above this level, you can see it is struggling. It's trying. It is struggling the last 2 days. So resistance and support levels do work because it's just psychology plays a very important part when it comes to people buying and selling stuff, whether it's commodities or stocks. Resistance, support, they're very important. Okay, and round numbers are very important as well. So copper is looking really good. Daily chart looks good. Weekly chart looks good. It's at resistance. If it can break above this level, looking really good. There's a few interesting copper plays on the ASX. Sandfire So Sandfire, I think that's at all-time high, still close. So this chart looks pretty good. The one I was holding, no longer hold it because they did a couple raising. So you can see just because the price of a commodity might be going up, it might be a nice uptrend, doesn't necessarily mean a company that is mining that commodity will see that or have the same chart. Another one is Ares Resources. This looks interesting. I had a quick look at their results, and it looks like they have turned around, and we're not seeing any sort of reaction in the chart just yet. So definitely Sandfire chart looks the best, but I'm wondering if the market isn't really catching on to Ares Resources. Too much negative sentiment in the company because of what's happened in the past, but maybe this could be a possible breakout soon. Ares Resources, ticker at AIS. What about iron ore? Iron ore is at $100. Yeah, I just had to. It's really weird. I get that session disconnect because I have to. What do you call it? I don't know what you call it. I have my work. I suppose I don't call it work. My YouTube profile, and also have my personal profile. And because I always have TradingView up in my personal profile, whenever I open up my YouTube profile, because I have TradingView open up in that, it just says session disconnect because I have it opened up in two locations. I understand what they're trying to do because I am a subscriber, and so I could have given my subscription information to you, and you could have TradingView open up at your place, and TradingView doesn't want that to happen, sort of like Netflix. Anyway, so I understand why that I have this thing popping up, but it should be smart enough to know I'm at the same location. I'm using the same computer. Anyway, iron ore. What can you say about iron ore? Nothing much. There's a chance it is just going sideways solidly. There's no trend. Without doubt, there's no trend with iron ore. It's hanging above $100 nicely, but I can't be bullish nor bearish when it comes to iron ore right now. And you can see we've had 4 moving average crossovers since December. And that is a sign that whatever you're looking at is going sideways. It's just consolidating. There's no trend. So that's all I can say when it comes to iron ore. If you have a look at some individual companies' charts, BHP, you're going to see the same sort of thing. There's no trend. In fact, iron ore, BHP is more like a downtrend than anything else. Rio Tinto, I think, is more of a no trend, maybe. Yeah, no trend here. Fortescue's a little bit different. Fortescue's a little bit more intriguing. This one's in a downtrend. So yeah, Fortescue's in a downtrend. So this is a little bit different than iron ore. So more weakness in Fortescue. I'm surprised by this one because the dividend yield's fairly high, has a dividend yield of 8.8%. So not a lot of interest or as much interest in Fortescue than say BHP or Rio Tinto. So yeah, interesting. What about uranium? So we had a really nice bounce in uranium, and we saw a similar bounce in some of the uranium companies. Not all, but a really nice bounce on Wednesday and Thursday. But again, this is just a bounce. This is not the end of the downtrend for uranium. I do know a lot of people, a lot of experts are really bullish on uranium for the longer term, but in at least the shorter term, if not the medium term, uranium is weak. The chart is weak. And you can definitely see that in individual companies' charts, like Boss Energy. By the way, Boss Energy's had a nice run. A few days run. Yep, there it is, a really nice bounce in Boss Energy. But if you have a look at some of the other uranium companies, Next Gen, yeah, it's a very weak bounce, but this chart is all over the place. And what else? Deep Yellow. Why not Deep Yellow? Actually, I'll have a look at Palladium as well, because at least they're in production. Nothing much happening with Deep Yellow. And finally, Palladium, because there was a bit of weakness in Palladium because, what was it? Oh, abnormal or unseasonal rainfall in Namibia. And that's why the share price actually dropped. So even though uranium went up 2 days in a row. We didn't see the likewise rise in Palladium. So Palladium share price or chart looks pretty weak. In fact, the share price has dropped from $18 at its peak to $6.56. By the way, there's a nice little support level for Palladium at about $5.65, and I suppose that goes back a fair way. That goes all the way back to 2021. And you can sort of see why, in fact, my line's not that straight. You can sort of see why that's a support level, because the price of Palladium has bounced off that level about 3 times since, in about 3 years. Okay, let's go back. Oh, by the way, I do have Boss Energy in my individual company's chart or portion of the video. Okay, back to, where were we? Oil. Okay, so oil is at an interesting spot or interesting zone. This purple box is that interesting zone. And whenever oil, maybe not whenever, but over the past 2 years, whenever oil gets into this purple box, we see it rally. Not big rallies, but this seems to be a really good support zone for oil. And that zone is between $64 and $68. Oil is just above that right now. So we have seen oil rally outside, not a big rally again, outside of this purple box. So at least the chances of downside from here for oil is limited unless we see it fall below 64. But even if we do see it fall below 64, I have no doubt OPEC will do something to raise the price of oil. Anyway, so that's oil. Safe level to buy, I don't know, if you really want to. And let's go through some of the other commodities fairly quickly. So we'll start off with gas. If you have a look at gases, this is natural gas, daily chart looks pretty good. I do like that. Lithium, still waiting for a bounce. I do have lithium. In fact, we might go to that. I do have a lithium watch lists, and I do have these lithium companies ranked by market cap. So at the top, we have Pilbara. I did take out which lithium company was recently bought out by Rio Tinto. That's gone. So Pilbara is the biggest lithium company on the ASX. And unfortunately for Pilbara, it has fallen through a support level. And not only did it fall through that, we saw it bounce, hit the support level, which is now resistance, and is starting to fall away. So it's tested that level, and that's a negative move. So down to $1.85. And again, we just don't know how much this has to fall. It could fall significantly from here. We just don't know. And to be honest with you, I went through all these charts for lithium companies, and there's nothing at this point in time to get excited about, except maybe Vulcan. But Vulcan's just so volatile. I just don't worry about that one. There's nothing here really. Novonix, Core Lithium, and then we're getting to companies with market cap below $100 million. Lake Resources, nothing to see at this point in time when it comes to lithium. Okay, so back to coal. Coal looks pretty good. No, it does not. Of course it doesn't. So I was tricking you there. I was hoping someone would go, what? So coal has dropped a fair bit over the past 3 or 4 months. It's gone from 140. This is Newcastle Coal Futures. It's gone from 142 down to just above $100. So it's a lot of weakness in coal. We did see a bit of a rally a week ago, and then it's come or pulled back. And likewise, individual coal companies on the ASX are looking fairly weak. Some of these have gone ex-dividend. Yancoal has dropped a fair bit. I'm pretty sure it's gone ex-dividend. Dividend yield's about 10%. Not a good-looking chart for Yancoal. Better, however, than Whitehaven. Whitehaven looks pretty weak. Is right on the support level. New Hope did release their results, and the results actually were better than expected, I think. And we did see a little bit of a rally, but again, the chart looks pretty weak. So I have no interest in coal companies at this point in time. And the other charts, we'll have a look at tin, because tin is really interesting because we had that rally in tin, and we saw the likewise rally in Metals X. And and tin hit 284,000. According to this, it's $1,000. And that was a resistance level. And we have seen it pull away or pull back. So it looks like that resistance level has held firm, and we have seen the price of tin pull back. So this was on some tin mine ceasing productions in the Democratic Republic of Congo because of some tensions. So I wouldn't say fall victim to those, but you just don't know how long that mine will have ceased operations. It could be 1 day, 1 week, 1 month. Just don't know. So whenever I see this sort of rally on the back of that sort of news, I don't usually get excited. Now, Metals X, on the other hand, this is interesting. Yeah, this is a really nice rally in Metals X. And then a further rally, share price increased 10% on Friday. I'm not sure what caused that with tin prices falling. So it's interesting. Nickel, no real interest in nickel or palladium, to be honest with you, unless I see something in the chart. Although nickel has gone a little bit of a rally. You can't really see that in the weekly chart, but in the daily chart, it's hard to see here because I haven't got a line, but it has gone a bit of a rally since the start of March. And palladium, yeah, nothing to really see here with palladium. Yeah, nothing to see. And what about cocoa? Cocoa still dropping? Yes, cocoa's dropping. And by the way, what we can now do with cocoa is if you just put a line, we'll put a line right there. That's the interesting level for cocoa, 7,200. That's the last two big lows we saw. And so if cocoa falls below that, all hands on deck, chocolate's going to be cheaper in the future, hopefully. Okay, now on to cryptocurrency. And we have seen weakness in these. So Bitcoin and Ethereum. We'd have the moving average crossover, no strength in crypto or Bitcoin. It's actually in a downtrend right now. If we see it fall below 78,000, that would be fairly weak. So definitely Bitcoin's looking weak. Not as weak, though, as Ethereum. Now, the reason I say that is Ethereum has dropped below $2,000. In fact, $2,100 was the important level, but it has dropped below $2,000. And this is in a downtrend. Even the little bit of a bounce was fairly weak for Ethereum. So the last time Ethereum was below $2,000, probably wasn't that long ago, was late 2023. So we are talking about 18 months ago. So Ethereum was looking the weakest it has for a while. Okay, now on to bonds and Bitcoin. Not Bitcoin, bonds and currency. The problem with what I'm doing is I'm looking at the time, just writing the down times of all this. It would make my editing a little bit easier, or my time stamping a little bit easier, just to know what times I want to put timestamps in. But it does make recording this a little bit trickier. So I'm making a little bit of mistakes here, saying bonds and Bitcoin. Anyway, onto bonds. Now, what do you see here? We're going to see a moving average crossover. Getting very close. Don't think the bond market knows what to do. Are we going to see increasing inflation? Are we going to see possibility of increasing interest rates because of increasing inflation? But the economy possibly is starting to look really weak. And if we do see a really weak economy in the United States, chances, even if we have inflation, maybe the bad economy will sort of negate that increased inflation because of tariffs. So a lot to pack through when it comes to what's going to happen with inflation, interest rates in the future. And that's probably why the bond market's just unsure right now. The bond market is unsure which way to go. I can see going either way at this point in time. And that's why we're not really seeing any sort of trend with bonds right now. TLT, which is the opposite of the bonds and sort of the mirror image of the 30-year bonds. And yeah, no interest in this either. And finally, the currency. It's fallen a little bit more. It's down below 63. I'm not sure why. Come on, Australian dollar, rally. I'm pretty sure the euro is rallying hard against the American dollar. Whereas Forex, euro, there we go. Yeah, look at that rally. Look at that euro rally. Has pulled back the last 3 days, but what a rally. Maybe not what a rally, but it's up about or maybe 6%. Anyway, that's all we've got when it comes to commodities, indices, crypto, bonds, and currency. Now on to individual companies' charts. And the theme for today's video is trend killer. So what I mean by trend killer will become clear in a second or so. And I have noticed, and this is something that I've noticed, it's taken me many, probably years to notice this, is when a company has a big red down day, that could be the end of the trend. So the trend of the share price must be in an uptrend. And then you see a big red down day, that is and could be considered a trend killer. Now, the next thing I'm going to do is now the complete opposite. Company share price is in a downtrend. And if you see a really good one-day candlestick, like share price up 20%, really good day, good volume coming in, would that be the trend killer for that sort of circumstance? So I do have a few possible examples of that. Maybe maybe one. So let's start off with Nuix. So you're going to see with all these companies, one really big down day. Now, these big down days could come on negative news. So, yeah. So let's start off with Nuix. And their big down day came on the 13th of November, 2024. I remember this because I was trading Nuix at this point in time. And when I saw this, my first thought was trend killer. So share price in a beautiful uptrend. I can't remember what it was. Must be AGM, trading update, that sort of thing. Share price on the day fell 22.16%. You notice there was a little bit of bounce, which is understandable because the share price was moving up. So there's a lot of positive sentiment behind the company. And then the share price fell a lot. And when people see the share price drop like this, some investors will go, oh, I can buy Nuix now at a cheaper price. So I'm going to start buying it because it's better value. Sort of like what a lot of the experts are doing now. Well, the market has fallen. There's better value out there. I'm going to start buying. So we can see that in the overall market, and we can see that in Nuix. Yeah, we saw the share price bounce, sort of like a false bounce. It's just those investors who think share price uptrend, good time to buy, it's cheaper now. But again, trend killer, and we can confirm that because look what the share price has done after that trend killer event for Nuix. Share prices continue to drop. They also released some bad results or trading update on the 28th of January. Now, that's not a trend killer because the share price is already in a downtrend, but it's interesting that that candlestick looks really positive, and the share price really went on a really good rally after that. And then, for some reason, maybe results, share price just collapsed after that. So a lot of volatility with Nuix, and the real trend killer was on the 13th of November. So that's Nuix, a good example. And that was, for me, time to get out of this trade for this company. Next on the list, we have Data 3. We have to go back a little bit for this one. I still remember this as well. Because you can see the share price of Data 3 rallying a fair bit in late 2023. Share price went from about $7.20 all the way up to $10 in a fairly short period of time. And I still remember that, thinking, oh, maybe I should trade this. And then on one day, the share price dropped 13.1%. This was on the 15th of February. So this must have been results. And the share price dropped the next day by another 9.53%. And then we saw a rally. Look at that. Look at that bounce. And of course, the reason why there was a bounce is because the share price fell 2 days in a row fairly heavily. And a lot of investors would be thinking, oh, there's some value in Data 3 right now. The other thing, actually, what I'm going to do is refresh it. For some reason, my volume is gone. And I was going to say, it really has gone. Oh, no, I got to go to Data 3. Still no volume. Where's my volume? Got it. This happens on occasion, and typically to get the volume back, all I do is refresh. And I go back to this, which has no volume. There we go. Oh, I see. There we go. It's that little thing there. Okay, I did not know that. Okay. let's go back to, oh, by the way, yeah, so let's have a look at the volume for Nuix first. And you'll notice when we had that really big down day, there was increased volume on that day. So some big volume coming through. And also, if you have a look at data 3, when they had those 2 big down days in a row, just look at the volume, massive volume coming through. So that's also a pretty good sign. And if you have a look at what data 3 has done since then, yeah, there's no trend. No trend at all. Now, in saying that, that uptrend was a really short uptrend, but still it was a trend killer. And yeah, no reason to be trading data 3 since then. Now on to Appen. Now this one is really obvious. And this one has, yeah, this is a definition of a trend killer, if ever there was one. So a lot of enthusiasm when it came to Appen. Terrible grammar, Michael. When it came to Appen, a beautiful breakout back in August of last year. Share price rallied for almost 6 months. Share price went from 50 cents up to $3, six-bagger in a fairly short period of time. So this was a pretty good trade. And then all of a sudden, when the company released their results on the 26th of February, share price dropped 33% on that day. Really big volume coming through. That's an automatic sell for me if I was trading this. And look what's happened since then. Trend killer, if ever there was one. Get out on the day. In fact, you could have sold on that day for like $2. Share price has almost halved since then. So no reason to be Appen right now. Trend killer. Next one on the list is another company. This is sort of a Readytech. This one I was paying a little bit more attention to. Share price looked like it was trying to move into an uptrend. This was back in late last year, early this year, trying to move into an uptrend. And when the company released their results, the market didn't like it. 26th of February, share price dropped 10.6% on the day. And that was it. That was the end of any sort of developing trend, the end of the positive sentiment behind this company. And look what the share price has done since then. So another trend killer. Integrated research. This one is interesting. So this one I was trading at the time. So we had the beautiful breakout back in May of last year. Beautiful breakout. I was actually in integrated research just before that. This looks really good. Share price was rallying. Share price got as high as about 96 cents. There was a little bit of weakness back in August. Then the company released their results on the 20th of August. Share price dropped 14.47% on that particular day. And that, for me, was the trend killer. That was the time to get out of integrated research. And we can see, even though there was a bit of a rally just after that, the next few months, look what happens to share price since then. Trend killer, another trend killer. Now on to Perenti. So this one is interesting because this was another one that I am trading or was trading. Now we're going to see how this plays out because this just happened. Little bit surprised it happened. It was on the back of the results. I don't think the results were that bad. I don't know what the market saw. Now I'm going to trust the market. Market is a little bit smarter than I am. But the share price did drop 15.94% on this particular day. And to me, that is a trend killer, but this could be an example where this rule does not work. Maybe the share price of Perenti will continue to rally after today. Now, a really good example where this does not work, I'm going to have to remember, I think it's Elders. I've just remembered Elders. Just remembered Elders. But in saying it's not what I'm looking for in the one-day candlestick. So on the 8th of April 2024, share price of Elders dropped 24.42%. And I thought that was a trend killer. And I suppose in a way it is. Yeah, suppose in a way it is, because before that, share price and trend looked really good. Share price dropped on that day. And even though share price did rally, look what's happened since then. So in a way, I thought this was maybe an example where a trend killer, a possible trend killer, did not play out that way. But having a look at what has happened to share price since then, yeah, share price has actually dropped below that share price on that day. Okay, Droneshield. This is probably a really good example of a trend killer. And in fact, yeah, this is a really good example of a trend killer. Beautiful uptrend. I did get out of Droneshield the day before this day. Now, this was me not predicting or forecasting a Trendkiller event. It was just the share price was getting way too elevated. It had run up way too much. It was way overbought. So I thought, yeah, I'm going to sell some of my shares in Droneshield. And then the next day, share price of Droneshield fell 22.3%. Look at the volume as well. Now, I don't believe the company released anything on that day. It was just selling, profit taking. Share price then dropped the next day by another 9.41%. And that is a trend killer. So we do have more information at play now. Share price did drop all the way from, say, $2 all the way down to 60 cents or so. Now we are starting to see a little bit more positive sentiment coming into Droneshield. And I think this is a potential trading or trade right now because the trend has shifted, sentiment has shifted to positive, and we are starting to see share price rally right now. Okay, Xero. This could be an example. Yeah, I was trying to find an example where a trend killer was wrong. And this was a difficult one. Because can you really say this was a share price of Xero I'm thinking of this day right here. I do remember this day. It was on the 9th of November 2023. Share price dropped 12.4%. I think this was on results. And I still remember a lot of negative vibes when it came to Xero. A lot of negativeness out there from brokers because of this day. And I'm not sure if you could say Xero was an uptrend before this. If this event or this day happened, say, in September, August of 2023, yes. But the share price was showing a bit of weakness before that particular trend killer event. And the share price dropped a lot. Then look what happened to the share price after that. Share price went sideways, not much more falling in the share price. And then the share price moved into uptrend fairly quickly. So I was trying to find an example of a trend killer event that failed. I suppose the best way to say it failed. And Xero was a possible example, but in reflection, I don't think it really fits into what I would consider a good example because most of the other examples, share price of these companies were in uptrends. Like Appen was in an uptrend. Droneshield, beautiful uptrend. Maybe not beautiful. Nuix, really good uptrend. So it's not quite the same, is it? Okay, now on to Megaport. Megaport is highly volatile. Whenever they release results, share price could go up 20%, down 20%. We saw the company experience this when they released the Appendix 4Cs. They're not releasing any more Appendix 4Cs. They don't have to because of the ASX. So they're releasing half-year and full results. And even last time they released half-year results, share price rose 19.5%, which is so normal for this company. You go back through history, these sort of events happen all the time. So January 2024, share price went up 27.6%. The previous Appendix 4C, October 2023, share price dropped 16%. Anyway, what I was looking for here, I don't know why I've included Megaport in this one. I don't know why, because I don't see any examples. Oh, no, I do know why. This one here. It's a short bow, but you could say Megaport was in an uptrend. This was on the 19th of January 2022. You could say Megaport was in an uptrend, and then this was a trend killer on that particular day. Share price dropped 16.15%, and then look what happened to the share price after that. So, yeah, you could say that. Not as good as some of these other charts. Share price was not in a really strong uptrend, but yeah, I could sort of say that. Myer, on the other hand, we just had a recent possible trend killer. So let's go back to the start of the period or the end of the period. So share price of Myer was in a pretty good uptrend. Not a bad uptrend. We had some really good trading back in June. Share price went all the way up to $1.24. A little bit of weakness just before they released their results, I think, or trading update. And on the 30th of January, share price of Myer dropped 23.14%. And then look at the bounce. There was a nice little bounce. Why was there a bounce? Well, a lot of investors go, ooh, I could have bought Myer at $1.20 $1.24. Now it's dropped to 88 cents. It's a bargain. I'm going to buy some Myer shares. It's an absolute bargain because the share price has dropped. And so we saw a rally, but look what has happened after that. Share price has continued to drop. So this is definitely a trend killer. Myer Holdings. Light and Wonder is an example or possible example of a trend killer failing. Yeah, okay, so yeah, this is probably the example I was looking at for a possible fail. And by the way, I'm a shareholder of Light and Wonder. And when this happened, I continued to hold Light and Wonder. So I thought this was a complete overreaction from the market. What happened on this day? It was one of their machines or something they couldn't use because it was too similar to Aristocrat's machine or something. I forget. So the market panicked. Share price dropped 18.4% on this day. This was the 24th of September. It does look like a possible trend killer because the share price was in a nice uptrend prior to that. So this could have been a trend killer. So it doesn't always work. This was what I was looking at. And the share price recently was higher. Share price was higher than before that trend killer event. So it's really interesting that this looks like a trend killer event, but I thought the market was overreacting. So maybe this does happen on occasion when the market overreacts. Jumbo Interactive. So I'm hoping I wasn't thinking this was a trend killer. 23rd of August. No, I think we have to go all the way back. All the way back. Oh, yes. Yes. No. There's no one. I think what I was looking for here was another example of a trend killer fail, just like Light and Wonder. And we're talking about the 16th of August, 2019. Share price of Jumbo Interactive fell 15.4%. So this could be a little bit different than all those other fails because if you have a look at, say, Appen, and we have to go all the way back, the share price dropped a fair bit. In fact, the share price dropped significantly below the moving averages. So that could be key for some of these trend killers. Maybe not always. Nuix didn't quite do that. So I think there is subtle differences between all these. And if we go back to Jumbo Interactive in 2019, and I should have done that, the share price of Jumbo was in a really good uptrend, really positive uptrend. Share price did drop 15% on the 16th of August. So this would have been negative financial results. And that pessimism didn't last very long. Share price responded fairly well, rebounded fairly well, and the share price rallied all the way up to $28. And then the share price started to show signs of weakness in late 2019. So this could have been the first sign of a trend killer, even though it took a bit of time to play out. So that happened in August, and the share price moved into a downtrend in November, so 3 months. So even though share price went to a new high, that was sort of forewarning the uptrend was possibly coming to an end. And it was just so much positive sentiment in this company. The share price kept on increasing. So this was sort of like a harbinger. I'm calling it a harbinger of future distress in the share price. Okay, I've already looked at Boss Energy. So why Boss Energy? Oh yeah, this is another case. Share price in a beautiful uptrend. And Boss Energy share price dropped 12.7% on the 9th of February. And that was it. That was the high. So the high was reached just before that. So even though share price didn't drop as much as some of these other examples, that was sort of the first sign of weakness in this sentiment in this company. And it wasn't long after the share price dropped another 10.86% on the 28th of May. Now, the problem with Boss Energy and some of the other mining companies is the share price is a lot of times beholden to the underlying commodity. So maybe there was a fair bit of weakness in uranium around these days. So yeah, maybe Boss Energy doesn't quite belong, but 2 really negative days over a short period of time. And that was sort of the end of the uptrend for Boss Energy. Aussie Broadband. So this is a company I own. Now, this is a little bit different. So why is this a little bit different? Oh, no, it's not. I was thinking I was talking about this day here. and 14th of March, and that's a little bit different. That's not quite the candlestick I'm looking for, but no, we have to go a little bit further back. We're going to the 2nd of May, 2022. Now, before this, Aussie Broadband was in a beautiful uptrend from when they listed. The share price had just reached an all-time high, slight pullback, and then all of a sudden on the 2nd of May 2022, share price dropped 28%. That was the trend killer without doubt, because then after that, share price started to drop and kept on dropping. In fact, the share price dropped. Yeah, share price halved. You could have sold on that day at $4 and then bought back in at $2 not that long after. So definitely a trend killer for Aussie Broadband. It has recovered, but for that period, it was a trend killer. Kogan. Why have I included Kogan? Oh, I know why I've included Kogan. I don't know. I think we're going to go back. Oh no, I do know. No. This was what I was actually no. We have examples of trend killers here. If we go back, so we do go back. Kogan. Now there was a bit of weakness in the share price, the chart just before this day, but on the 10th of November 2020, share price dropped 17%, and I'm pretty sure this had to do with the shots, the COVID-19 shots. This is when they announced it, or maybe it was just before that. But the share price dropped on that day 17%, 10th of November. That was a good sign that this was a trend killer. And then not long after, when the company released the results in January, or maybe it was a trading update, 29th of January, share price dropped 8.5%. That was another, not a bad trend killer, but that was another big negative sign. And the share price of Kogan then moved into a long-term downtrend. Look at that. Now, I think another reason I included Kogan is I was starting to look for examples of trend killers of downtrends. And I saw this share price of Kogan in a really big downtrend. And then on the 28th of July 2022, share price rallied 50% in one day. Is that the trend killer for the downtrend? And I think, yeah. Now, the share price didn't quite rally after that, but that didn't signify the bottom had been reached for Kogan, and it took a while for the share price to recover, to get higher. But it seems like that was a trend killer. Share price in a downtrend, the company released something positive on the 28th of July, share price ran up 50%. That was the end of the downtrend for Kogan. So I think there's potential that this could work in the opposite direction, looking for ends in downtrends. And this could be more exciting. Particularly if you're following a company that's been in downtrend for a long time. Oh, this could be the end of a downtrend for Kogan. And it looks like it was. Could have been a good time to buy. And Cettire. Finally, Cettire. This is the final one. Yeah, this one is all over the place. I'm seeing if there's been any trend killers. You could almost say the 3rd of February 2022 was trend killer, down 21.2%, but it was showing weakness before that. And we did see quite a few big down days in a row. So not quite what I'm looking for, because it was already in downtrend before then. And then look what happened to share price before then. I'm going to see if there's any sort of trend killers in the opposite direction. There wasn't really. Maybe. No, not really. No, nothing really. And then if we keep going on, yeah, I think the reason I've included Cettire was 2nd of April. Share price was running a fair bit of excitement, a lot of volatility in Cettire. This was back in February, March 2024. Share price rallied 25.24% on the 7th of February. Looked like it was pretty good. Share price then dropped 14% on the 6th of March. Maybe that was directed selling. And then all of a sudden, on the 2nd of April, share price dropped 15.8%. Quickly followed by another drop of, well, the one-day candlestick looks worse, but the share price only dropped 7% on that day. But that definitely were trend killers. Definitely sentiment in this company shifted on those days. But you can see trend killers don't happen in downtrends or uptrends, because share price in a downtrend, share price dropped it up 49% on the 24th of June. It wasn't really a trend killer. It was already in a downtrend. And maybe you could argue 24th September, that could be a trend killer. Share price up 78.95%. But the share price was sort of coming out of the trend then, so I don't know. And look what the share price has done since then. It's all gone down. Okay, that's really all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.